Welcome to Straight Up with Trader Donk. We've got a fair bit to cover today. There's a lot of back and forth in the market. The fight between the buyers and the sells, and that's typically what you'd like to see at a bottom, is obviously when the sells meet the buyers, we find a bottom. So a lot of people don't know which way that the market's going at the moment, and that is shown easily through the funding rates, because a lot of people going short, then majority long, then majority short again. But we will cover that. So first we'll look at the top 100, then we'll look at some of the results from the FOC meeting and how it impacts the market. Then we'll have a look at Biden's FUD attack. First off, we'll take a little look at the ladder and see who's performing at all, if any. We've got Sandbox at the top. I believe that's because of some sort of announcement with Warner. So that's pretty good to see that there's some news fundamentals driving the market, and the market's actually starting to see a bit of logic and reason again. For how long is the question. So some nice little bit of green on the 24, no green on the 7 days because it's been a dog shit of a week. But the losers, Convex, you got the higher you go, the further it is to fall. And some losers, Looper and Gala, not that much of a loss. But as we can see on the general market cap, you'll see a lot of the coins are showing this sort of double bottom here. We've got bottom there, sometimes equal double bottoms, sometimes there's that and that, sometimes it's a bit of a inverse head and shoulders appearance. So this is a lot of the time what you will see the market look like all round when everything's working in synchronous and forming to create I won't call it a bottom because of the stigma behind that word at the moment, but maybe a local bottom or a temporary platform and a springboard perhaps. So you'll see a lot of them all basically looking the same, with the same sort of capitulation needle in the middle, and then we've got a bit of a variance, but a lot of higher lows being formed straight off the bat. So this can, I'm not saying that it definitely is, but this can be what it looks like a lot of the time when forming a base. Onto some macro news. I just wanted to talk about the FOMC meeting. The thing with Jerome Powell and the Federal Reserve is that since basically all of last year and a bit of the year before, as soon as he opened his mouth and when money printer go brrrr, the markets are shooting up. So everybody was just thanking Jerome Powell. Now, since about November, every time that he comes out, everybody's watching, waiting, and it's been a bearish reaction. So it's not about what he says, it's about more so about the expectation of what he says. And a good question that is that if Powell says, as Jerome Powell and the FOMC and the Federal Reserve say that the economy is excellent, then why are the markets falling? The markets, the economy was trash during COVID, yet the markets are pumping. So it's like if the markets are good, if the economy is good, then there's room to raise rates and bring it back in a bit. And if the market's shit, then the economy's shit, then they're stimulating the economy with all this QE and inflation and all that sort of jazz. So, and lowering the rates. So it's sort of inverse in that sense. And what we did see leading up into the meeting was that the market was sort of hoping that and expecting that maybe he would ease off a bit on his earlier prior allegations of raising rates and the purchasing that they've been doing. But it just turned out that he was saying they're right on track. So that sort of rejected the market in a sense, and that just added to the general confusion of the matter. So the piece of news that we got today is Biden and the White House coming out saying Bitcoin is a matter of national security, as seen here in this article, and that they need to assemble a regulatory framework that covers crypto, stablecoins, NFTs, yada yada yada, all that jazz. It's nothing new. It's just the same old. It's a nice injection of FUD. Bitcoin gunning for the spot of a global reserve currency, basically what we all know and understand, Bitcoin being far superior to the dollar. So of course it's going to be a national security and a worry for the governments all over the world that don't want there to be alternatives to the piece of shit fiat currency that is devaluing by the day, by the second. So obviously Bitcoin is too far in front now. They can try and regulate it out of existence. They're going to have a very difficult time with all the backing that Bitcoin and network effect that Bitcoin has already. They should have banned it straight away in like 2016 or 2015, 2017, when there was actually possibly a chance for them to be able to really make an impact on it. But now, if you just have a look at like who holds it, like, come on, bro. In saying that, though, and being sensible and realizing that White House reportedly preparing executive order on crypto is another news catalyst. Just after we finished with the FOMC meeting, we've got another thing on our hands. So these also are included in the frame of large-scale volatility and indecision on not knowing what the hell's going to happen unless you've got somebody on the inside, a friend of Biden or a man in the White House. It is very difficult to know what sort of price action this will have. So it's obviously going to be factored into the price and the lead up to the release of the executive order, and then the expectations on whether or not it shoots over or under is going to have a large impact on the price, and that is something that we cannot predict unless, like I said, got somebody in the know. So that's just something to keep in mind. Trading, along with the neutrality of the market right now, is just average trading. I mean, it's range trading, and you just could get absolutely shat on depending on what Biden comes out and says. So keep that in mind. Be sensible. It's a good time to think about the longer picture. Anyways, now I want to just get into the funding rates. So if we take a look here and just have a little dive into what they are exactly, yet again, because of how important it is, and how this is literally, if there was a war between the bulls and the bears, the funding rates, in my opinion, are the front line. This is where the battle's getting duked out with the soldiers, right, hand-to-hand combat going on right here. So if we look at the definition of the funding rates right here, on this coin glass metric, we can see positive funding rates suggest speculators are bullish and long traders paying to the short traders. So it's a little bit deceiving, but you can see even though the green, they've got a negative next to them, that is negative funding rates right now. And then negative funding rates suggest speculators are bearish and the short traders are paying to fund the long traders. That is negative funding rates. So we can see here negative funding rates suggest speculators are bearish. So more people are bearish than bullish here. And that means that the general consensus is that we're going down. So to reinforce the fact that we are fighting here at the bottom to create a bottom, and a lot of people are bearish, a lot of people are bullish, and we're meeting right in the middle, and it's very hard to exactly point out a direction right now, is if we look at Coinalyze, the funding rates as well, and that the way that they measure it is the aggregated funding rate here, and then the predicted funding rate are different. Right there, we can see that that is negative and that is positive. And if we flick over to Glassnode, we can see here that it's positive right there. So it's positive there, it's positive, and then predicted to be negative there, and then it's negative there. So there's a lot of disparity going on in the funding rate at the moment. There's a lot of there's a lot of both sides of the story. So we can see that really deeply, that there's a ping pong match going on between bullish on-chain metrics, bearish technical analysis metrics, bearish, well, it's basically bearish news as well, bearish macro. There's just a lot of bull versus bear happening right now, and we meet again at this place. But every time we go further down, we find we find another ledge of support. The battle wages stronger, and there's more at stake. If we flick over here onto Bitcoin hourly chart and have a close look at what's going on exactly, you can see that there's a lot of both sides of the story getting told here as well. We've got bear traps, we've got bull traps, we've got a mid-range going along right here. We've got a little bit in there, a little bit in here, and now we're poking our head over, trying to check if we can get above this next resistance that we're looking at right here. But if we can see that there's closely here at the RSI, we can see how much, see this big movement up here. See if we draw a line right here. So from there to there, we moved pretty high. And then basically we've got a very similar move, just a tiny bit shorter. But then if we look over here, we see it, the actual price move a lot shorter. So what that means is that nearly the same amount of buying pressure and momentum was needed to cause even a smaller move than the big one. So we say X amount of buying pressure and momentum moved the price up this much, and then we got basically a same dose to that buying pressure and momentum, and we only got not as far. So that just shows that the bears are still pushing down heavily, and it's taking a lot to get up. So it's very neutral right now. Everything in this market is very neutral, except for the fact that a lot of the liquid Bitcoin supply is unbelievably scarce right now. Like, the Bitcoin supply is so much tighter than we've seen in lots of similar situations. So the Bitcoin supply is that fucking scarce right now. But these technical analysis then again shows that it's very hard to get that sort of buying pressure and demand to make it the scarce illiquid supply of Bitcoin matter and count. I know I harp on a lot about FTX and FTT coin, but there's a reason for that, and it's because the fundamentals meet the technicals so well, and also, or the technicals show the fundamentals so well, and also just the utility of exchange tokens, especially during the down times in the market, and the fact that there is a utility and a need for them still, like staking FTT. And they're not a sponsor of this video yet. A small example is that if you're staking FTT, you can get free withdrawals out of the platform flat stick no matter what's going on, and there's always going to be a need for withdrawals no matter what the market's doing. But let's just have a little look here and show that there's a good nice dose of volatility. I just want to if we take a look at the Bollinger Bands, we can see that they're spreading up and it's looking to make some sort of larger moves, but also the fact that we're getting closer to touch 21 again. It's always a fun time. But the biggest one that I want to show you with FTT, and something that I'm actually having a lot of trouble finding in any other altcoins, really, is just the strength of that bullish divergence right here. So as we can see, the bullish divergence is real right here. So bullets. So really, with the RSI, and people in the blockchain bulls know that if we are making bullish divergence, we want at least 3 probably minimum for large scale conviction of bullish divergence and trend reversal. And right here we've just got 1, 2, 3, 1, 2, 3. That's as good as it gets. The stochastics down there starting to trend upwards, and everything's actually looking prime. We've got a downtrend with decreasing volume. FTT on the daily is actually one of the strongest altcoin charts that I can actually find, and I've been looking basically all morning for them. And the other coin that I want to show you with strength is Matic. So I was showing you long-term strength on FTT because we're on the daily chart, and I was showing you bullish divergence on the daily, which shows a lot more long-term momentum and strength of trend reversal. But here we're looking at Matic on a short-term play, and here we can see zoomed in, we've got on the 1 hourly, we've also got the bullish divergence here, but this is a hidden bullish divergence, so hidden trend continuation basically, which is there, and there. That's a divergence. We've got a strong trend line at the bottom, and then we've got basically hitting here, testing again. So we have more and more pushes to the upside. We are springing in here and looking for, so you'll be watching the retest, you'll be watching where this trend line meets the resistance line. This is a point of importance. So a breakout above here, then a retest, and then that's prime buying right there, and a way that you can make a lot of money out of this trade if it follows through and follows those confirmations on the 1 hourly in the short term, and Bitcoin plays ball, is through the Matic 3x long token on KuCoin. It's here, this is the chart. It will just mimic Matic in the short term period. But if you know about leverage tokens and only trade these tokens if you understand leverage tokens, is the fact that you cannot hold them for a long period of time, or they will just erode on you. So you have to be in and out quite fast, but just realize that you can make 3 times the gains of the price movement of the underlying asset, and in this case it's Matic. That's it for today, and if you'd like to keep updated on a daily basis, come check us out in Blockchain Bulls. The link is below. Peace and love, and I'll see you in the next one.